Good morning. Thank you for joining us this morning. Steve Harney is not going to be here today, but he will come back next week. So for this deep dive, there's two myths that keep coming up every year. They don't want to go away. Like an invasive plant in your garden. You work really hard to get rid of that plant all the summer, hoping that you will not see it again next year. And what's the first plant that you see in the spring? That plant coming up again. Oh, that is how I feel about these two myths. The 20% down payment and the 780 FICO score. Maybe you're saying, no way. Those are all myths. They are not happening now. Well, this is not what Freddie Mac is saying. A recent survey found out that nearly a third of prospective buyers think that they need a down payment of 20% or more to buy a home. A third of the buyers. I'm telling you, the plan keeps coming up. They continue saying, this myth remains one of the largest perceived barriers to achieving home ownership. Please keep this in mind if you are talking to potential buyers, because 1/3 of your buyers are thinking about it. And we need to knock down that barrier and help them to achieve homeownership. A second survey, this time of long-term renters. Again, we can see that the challenge is the lack of education, financial education. 63% say it will be easier to transition from renting to homeownership if they knew more about the different kinds of mortgage options. 62% say if they knew about down payment assistance programs. 59% say first-time homebuyer programs, and 55% say if they knew about financial planning, coaching resources. These long-term renters want to learn. They want to transition from renting to homeownership. And who can help them? You. You are the person with the knowledge to help them on that journey. Please make sure you find ways to help educate the buyers and renters in your area. 55% are looking for coaching resources. Be their coach. Help them to win in the current housing market. I'm not going to talk about down payment assistance much because we already did a deep dive a couple of months ago. If you want, you can go back to our YouTube channel and you can watch that deep dive later. The only thing that I'm going to mention is that the number of programs have been increasing since then. Please let your buyers know about the programs available in your marketplace. Let's focus on the first myth, 20% down payment. This is from the mortgage report, and they explain, although putting down 20% to avoid mortgage insurance is wise, if affordable, is a myth that is always necessary. In fact, most people opt for a much lower down payment. If we look at the numbers from NAR, the median down payment is not 20%, not even for repeated buyers, 19% in 2023. All buyers, 15%, and first-time buyers is down to 8%. We need to go back all the way to 1989 to see 20% for all buyers. A different way to see just the numbers from last year. Again, today's median down payment is less than 20%. This is a good graph to keep on your phone, to share with your buyers if these conversations come up. Please explain to the buyers that depending on the type of mortgage program for which they are applying, there is going to be a specific minimum down payment amount required. Why is that important? Understanding how much down payment for a house they need is key to choosing the best mortgage option for their financial situation. Maybe they ask their parents, or maybe they ask their friend how the process was for buying a home for them before they came to see you. They need to understand that each financial situation is different, and it can be a little bit different for them too. Here, we have the minimum down payment requirement or recommended by type of loan. Again, As we mentioned before, it will depend on the mortgage program. And you can see here also in the blue sentence, 20% down payment is recommended, but is not a requirement. As a matter of fact, there is no 20% on that table. It goes from 3% to 10%. From Freddie Mac, buyers put down 5 to 20% of the purchase price, but it can be as little as 3%. Buyers putting down less than 20% are required to pay private mortgage insurance monthly until they build up 20% equity on their home. I think this is the reason why some buyers believe that they need 20% down payment to avoid paying PMI. We must explain to them that they can cancel the PMI once they reach the 20% equity on their home. The mortgage report is saying the same thing. As they pay down the loan balance and their equity increase, they will be allowed to request the cancellation of PMI. If your buyers is trying to avoid paying PMI and they are waiting to save enough money for a 20% down payment, that can take a while. Experian explained it like this. Putting down 20% on a home purchase can reduce your monthly payment, eliminate private mortgage insurance, and possibly give you a lower interest rate. However, it can take a long time for first-time home buyers to achieve that goal. If you're working with first-time home buyers, they need to review all the pros and cons and see what's best for their financial situation. It may not be as beneficial as they think. Now, there is something else to keep in mind. They can take their time to save for 20% down payment to save costs, but the price of their future home may go up. So putting less than 20% down might be worth it to get in their first home sooner and start building equity. How long is it going to take them to save 20%? 2 years, 5 years? We have shown you the home price expectation survey with the expected equity gain for the next 5 years. They will be missing the opportunity to create that equity. We don't want you buyers to miss that opportunity. Help them to understand what is happening with the prices on your marketplace. Not sure what to say? Did I mention that Steve will be covering that subject next week? We will talk about that later. Now, Experian reminds us that while it's important to determine how much to put down on your home purchase, it's only one aspect of the home buying process. It's also crucial to monitor your credit to ensure that it's good enough to secure favor. That brings us to the second, the 780 FICO score. Why 780? That is the number that we see advertised. And the reason for that is that if we look at the median credit score in the US for those taking out a mortgage in the fourth quarter of 2023 was 770. Again, we're talking about the median credit score reported by the New York Fed. Yes, this number is going up, but that doesn't mean that they need to have that credit score. If we look at the average FICO credit score by year, it was 715 in 2023. I think people are familiar with the term FICO score, and buyer must know that their credit score, as is mentioned here. A credit score isn't the only deciding factor on your mortgage application, but it's a significant one. So when you are house shopping, it's important to know where your credit stands and how to use it to get the best mortgage rate possible. Why? Here you can see the FICO score range. This can give an idea of the buyers, either credit is very good, fair, or poor. As we mentioned before, it's important to know where your credit stands and how to use it to get the best mortgage rate possible. As we know, the mortgage rate is something that is in the mind of all the buyers right now, and their credit score can have an impact on the rate they will get. If the buyers want to know how they're doing compared to their cohort, here we had the average credit score by age. By the way, I don't see 780 on the graph. The credit score, commonly called a FICO score, can range from 300 at the lower end to 850, a score of 740 or above is considered very good. But you don't need that score or above to buy a home. And that is the part that we want to emphasize. They don't need a 740 score to buy a home. We saw a similar graph with the down payment. Here is the minimum credit score by loan type. One more time, I don't see 780 in the graph either. Again, another good graph to keep in your stack of graphs for buyers this spring. We know that the average FICO score was 715 in 2023. Maybe some of the buyers already have a good credit, but they think that they need a higher. They need your help to understand that they can be closer to buy a home that they think. Now, we also know that others have struggled in the last couple of years, and maybe that had an impact on their credit. You can also help them by putting them in contact with a loan officer that can help them to improve their credit. And once they are ready, I know that the loan officer is going to inform you. If you have a bad credit but are a first-time home buyer, start maximizing your score. Before you begin, check your credit score so you know where you stand. Review your credit history to make sure it's accurate. And remember to consistently pay your bills on time. 3 excellent tips to help your buyers. Now, from a different source, the path to a higher credit score. 1, reduce debt. 2, pay on time. 3, correct any errors on your credit report. Again, great tips to share your buyers and help them to improve their credit score. Please educate your community. Create a video to help them to get ready to buy. Not sure how to do it? We did it for you. Go to our mobile app, look up 4 scripts, and record this small video. In less than 1 minute, you can share 3 tips to your buyers to improve their credit score. I hope the information that we shared today can help you, can help some of your buyers. And as we get into the spring market and we start to see more buyers coming up, we need to make sure that they know the facts, not the myths. Let's make sure that this year we get rid of those invasive plans. We don't need these myths in the housing market. As a reminder, Steve Harney will return next week, and he will share the final home price appreciation numbers for 2023 and what to expect for 2024.